Good evening, everybody. How are we today? Nice. 57, 55, 52, 41, 21, 10, 11, 12 cents Bitcoin. I've been seeing some really wild prices being pushed across the board. The idea with Bitcoin is this, guys. Okay? You need to wait for a point in the chart that Bitcoin will never get to and then buy at that point. That's the best strategy, guys. That's the best strategy. Oh, man. What a day. I'm just sat here enjoying a nice cup of tea, getting ready to break down what has been happening in the charts today, ladies and gentlemen. Now, wherever you are across the world right now and whatever time it is, I am 8 minutes late there or thereabouts because I'm normally coming on at about 10 past 10. That's the schedule. But I've been coming on pretty sooner because I've had things to sort out. But tonight, we need to dive into understanding why Bitcoin has dropped. Because right now, ladies and gentlemen, things across the board, it's all psychological. Challenge me if you will. But 90% of this game is psychological. Why? Because the same reason you are made to buy is the same reason you are made to sell. Okay? Money. That's all it is. People act funny with money. And when there is an attachment to money, they do something. That something can be positive or it can be negative. The charts reflect people's indecisions, indecisiveness, lack of rationale, no discipline, fear, greed, anxiety, hope. It's all in these charts. You know? That's what this is all about. You're 1,890% up. That's what I want to see, man. You see, this is the thing about trading. Whether it's up or down, the idea is to try and give us, well, get the gains. You know? Touchwood, Rosie, thank you very much. My daughter's doing well now. Okay, she's all right. I've got a whole day with her tomorrow. So I'm going to take her to some play area so she can start tearing things up there and going nuts on other kids. Nah, she's all good. But yeah. Made money first time on the bounce and purchased some spot goodies. Nice. Well done. Well done. Camille, if you're trying to be a scalper, okay, do not become a scalper because you like the idea of scalping. Is it suited to your personality? Are you impulsive? Are you there quick, ready to make a decision, whether it's a loss or a gain? Because if you can't make decisions quick as a scalper, and if you don't make decisions on your day-to-day basis, if your natural personality, if you are reluctant to make a decision in an instance, trading is not for you. Or should I say scalping is not for you. You know? How's the beard going? Oh my God, that's freaky stuff right there. Holding isn't harder than trading. You know what? Holding is a hard thing, and I'm going to get straight into it right now, ladies and gentlemen. So for anybody new to the channel, be sure to like and subscribe. 700 of you in the room and only 182 of you are showing love. Listen, guys, I like you and I hope you like me. So let's work the algo. All right? And to my pattern watchers, mad love and respect for rolling out every single day to these streams. Got nothing but love for pattern watchers. My name is Tino. Welcome to the Traders Reality Show. Let's have a conversation, guys. This is my favorite part of the night. Why? Because we work out what has happened based on what we discussed earlier on today. Now let's take it back to class. All right? Let's have a conversation about this today. So earlier on, we were watching Bitcoin actually doing some very interesting behavior. Okay? Now in the streams previously, we were working out as to whether or not this W formation was going to play out. What did we need to see? Well, we were expecting another push to the downside and anticipated that the support that came in at this point in the chart right here would actually trigger some more orders to step price back up, but they weren't done with the zone. You see, that's the thing with trading. You have to factor in both areas. You have to say, well, what's going to happen if it does go up and what's going to happen if it goes down? So the first thing that we need to consider, especially on the 15-minute time frame where the momentum starts to develop, we need to say to ourselves, if Bitcoin's going to complete this W formation, we need to make sure that the 5 and the 13 EMA, which is demonstrated by the yellow and the red line right there, once they start turning up, okay, price would need to be above those two moving averages, and then price would need to break above the 50 EMA, and at the same time both the 5 and the 13 EMA would need to be pointing upwards. In essence, something like this. Can you see the 5 and the 13 EMA? We would need this sort of behavior to appear in the chart. That wasn't the case, ladies and gentlemen, which is why earlier on to the Patreons, we had the projections of Bitcoin coming to this point in the chart and this zone down here, which was the vector candle recovery zone. Why were we of that understanding? Because the following was going on. They hit the lows once, they worked the wick. They hit the lows again, they worked the wick. The final hit to the downside, if the candlesticks or the pressure behind the market maker to push price down lower, because traders right now, holders and traders are in denial, and that is on the basis of the glass node. The glass node is giving an indication that traders are in the denial stage. They don't think it can go down anymore because of how close we are to the all-time high. All right, because of all the information that's being pumped around the internet about Bitcoin hitting 100K, 200K, 500K, whatever crazy price zones that they are pushing price on for Bitcoin, regardless of whatever is being said about it, the only truth behind Bitcoin is in the price that it is right now. Okay? So as you can see, we projected the one zone and the second zone, and before you know it, price just did that. Okay, came all the way down towards the 56,688, and in the actual chart we were only projecting what, the 57,200 zone. That was the vector candle recovery zone. They absolutely ripped that zone apart, and then they went all the way down towards 56,593. So happy days for the projection 1 and 2. They hit the previous wick right here, and it was at this point I was expecting them to try and formulate the W formation. The W formation failed, but we were aware that if the likeliness of price to continue down lower was going to hit, then happy days. Patreons, range daily low. What do you know? Where is it? Range daily low taken. We were expecting the range daily low on MT4. It completely annihilated and ripped that zone apart. But what was it about this behavior by the market makers that was making us believe that price could potentially go down lower? Okay, what was the build up about? See, earlier on in one of the masterclasses that we did today, we were talking about the importance of these two stopping volume candles and the behavior of price when it came up to the highs and spiked straight down. You see, everyone was waiting for Bitcoin to turn at this point. How many people were drawing out all their pennants and their Toblerones and their triangles all over the place, waiting for Bitcoin to come and break out from those zones? Okay? And that's exactly what happened here. They initiated two stop hunt rises, spiked 1, spiked 2, stopping volume, rejection of the 50 EMA, and price kept closing below the 5 and the 13 EMA. And then in New York made them pay the price. They spiked price down lower. Okay? Now, what are we likely to expect? Well, this is the thing, ladies and gentlemen. If we take it back to the cycles on the 1 hour time frame, we've got the M formation, drop level 1, rise, drop level 2, rise, drop level 3. By principle, this should be the zone that Bitcoin presents a pattern if it's in line with the cyclical movement. Now, roll on to the daily time frame. Where are we there? Well, we've broken the 50 EMA. This is the first time Bitcoin has broken the 50 EMA since the last time it came away from it, which was the 30th of September. Okay? This is the first time they've hit it. About time they hit it. Why? Because we need to see the reset. But what's positive about this is we are now seeing vector candles at points in the chart where the market maker can go long at the lowest point in the chart at the highest range. So we know he's building positions. All right. Now, earlier I'm talking about traders are in denial, and that's based on the glass node, okay? The glass node is showing, and this is in the past 24 hours. So this is going to get updated at 12 o'clock tonight, all right, if I'm correct. It will get updated tonight at 12. This zone right here, so if I zoom in and show you, right, this zone right here, price is the white line above, and this is the indicator, which is Bitcoin. It's the unrealized profit and losses in Bitcoin right now, okay? So those who have got profits in Bitcoin, okay, are right now at a stage of denial. They're not accepting that Bitcoin is actually dropping and they think it's going to continue back up, all right? Well, what price does it need to be for these guys to have the belief that it's going to go back up again, and the belief is going to see price continue higher, and the optimism is going to step in with them thinking that, yes, it is going to go higher? Because right now, the reason they're in denial is because they don't know if it will. They're trying to see if it's now is the time that they are going to realize whether they need to close their positions or not. This is how I'm translating this information based on the key that is provided below. All right? The next type of indication about the sentiment behind the unrealized profit and losses, or the mindset of the traders and the holders, is anxiety. See, the way I understand how to read this is, as it's a darker orange and it's rising, optimism is coming in. Okay? As it's pulling back, anxiety is kicking in. All right? So this is where we are right now. Traders are in denial. Is the anxiety going to start kicking in? That's what I understand about it. So, the daily, we understood on the daily cycle, right? The daily cycle itself is W formation, rise up, level 1 drop, rise up, level 2 drop. We are waiting for price to stabilize and then make another attempt at the high. Now, how long is it going to be until they actually decide to turn price? Because we've seen 3 moves to the downside. Look, we've got 1 hit there. We've got the second here, and now we are working the third. You see, Bitcoin has every reason to go down below the 50 EMA. Now, it could go down below the 50 EMA, stabilize, and range out for a little bit, no different to what it was doing over here, and drop one more time to tap the 200 EMA. But in this instance, by principle, we would expect the 200 EMA to edge closer and closer to price. Okay, so as price comes down, if the 50 EMA decides to turn, it's at this point where both the 200 and the 50 meet, where we may see price actually form a pattern. Okay, now, in my opinion, I do believe that we are going to see another move to the upside. But it's when they decide to finish with this move here. You see, the move to the downside from the highs is appearing fast, okay? Because they want to quickly get into the pools of liquidity. They want to quickly tap and take advantage of the traders who are not paying themselves. And holders are in the same boat as well. Holders should also pay themselves, okay? If you are a holder and you got Bitcoin at 40K and you're now riding up all the way up to 57 or even 67, okay? You should bank your profits and prepare yourself for another run. Because the idea of holding is, yes, you're holding onto it for dear life. Well, what are you in the game of trading, or should I say cryptocurrency for anyway? The idea is to accumulate as much money as you can from your investments. That actually does mean to close some of your trades, okay, and your positions, and get some money out your bags, put it to the side, and wait for another opportunity to step in again. All right? So you get a choice to be a holder. Yeah? A trader also gets a choice. He can open his trade and he can close his trade in the same day, in the same second, same minute, whatever you want. But what I'm trying to say to you from a holder's perspective, all right, what price does Bitcoin need to be for you to say, yes, I'm going to close it? Because if you're not closing it because you think it's going to go to 100K, you better have some solid hands to be able to sit through the fact that Bitcoin nearly hit 70K, and we have to accept that it could actually come all the way down to 52 and 50,000 because there is a pool of liquidity on the daily time frame at that zone that the market maker will not hesitate to take. You know? Yeah, look, cool. People will disagree, bro. People will disagree. I ain't saying what I'm saying is gospel. Okay? I'm saying from a perspective, from a holder's perspective, how many people... All right, let me just put it like this to you. Let me bring it to you like this. From a holder's perspective, say you brought Bitcoin at 28K, all right? And you've now got Bitcoin at 52 at this zone. That's nearly double your investment, bruv. Okay? Now, that all depends on how much Bitcoin you're buying. Okay? If you brought 30 Bitcoin, for example, at 28K, and you got a position now which says to you it's now at 52K, you're sitting cool. Why would you allow yourself to witness it to drop down lower because you think it's going to go high? You see, how much are you prepared to pay to say that you are wrong? Don't play that game, because look what happened last time. Anyone that got involved in Bitcoin in January, okay, must be laughing their heads off at 29, because when it hit all the way up towards 65 up here and they didn't do anything about it, they would have paid the price, because they would have gone back to break even. So they would have had to sit through this madness, okay, to only wait for it to come up to this point again one more time, and the heightened and the euphoria of Bitcoin making another attempt to the high, they would have just been shut down again. So look at the cycles of emotions that traders will experience, which is why I say to holders, your goal is to buy at the lowest point and to sell at the highest point and reset. Keep doing it. Keep playing that game. Buy it, sell it at a profit. Buy it, sell it at a profit. That's the name of a holder's game. He's not going to be concerned about price going up or down in the range daily high and low that traders care about. All right? He's interested if he can get it in at 20K, and is he going to sell it at 60K? All right? He's in for the bigger swing. He's a position trader. That's what a holder is. He's holding a position. Okay? Whether it's owning the coin or holding it in a platform on an exchange, you are position traders. That's what you are. Holders is because you're just holding it and you're not letting go. Why would you do that? Why would you leave an investment of 20K starting investment and then it realizes an increase of up to 65K per coin? You've got yourself 4 or 5 Bitcoin. Why on earth would you not see that realization in profit? Why would you sit and hold it all the way down? To prove what? To prove that you lost a lot of money. You know, that's my take on it. You know? What I'm saying is, as it starts to break down, okay? That's what I'm saying. This is it. Nah, this is not losing, but this is not what I'm trying to say. It's not advice. I'm giving you my point of view on what holders are. You know? Holders. Are you here just to show that you can hold a position? So when you decide to close your holding your bags in Bitcoin, does it matter if it's in a profit or not? Because that's the question for the holders. Yeah? That's the question for the holders. Does it matter if you are in a position, is in a profitable position or not? If not, then fine. Yeah, position. You're in long term, 10 years. Till infinity or bust. That sums it up. You know? Anyway. Back to trading. Bitcoin. We are expecting another cyclical move to the upside. Okay? That cyclical move to the upside, when it starts, it can start in 2 zones. It can either start at the 200 EMA, or it can start after it hits this pool of liquidity. The fact that they've broken the 50 EMA right here tells us that something might actually happen. We may get a continuation. You know? That's what it is. And you know what? If you are new to the channel, be sure to like and subscribe so you can get stupid comments again. Listen, my opinion on how I think about trading and holding is my opinion, guys. I've been in the game nearly 12 years, man. And that's not crypto, that's Forex. Okay? And the principle is exactly the same. It's no different. Holding is no different to treasury bills. That's how I see it. You know, you're just hoping for the best. Holding just to keep a safe game and sit through wild fluctuations. That's it. What point does the holder pay himself? That's the thing. That's what I'm trying to get. I'm only trying to get you guys to realize it's okay to pay yourselves. It's good to see a profit. You know? Why would you put yourself through that torment When you see an asset go from 20 all the way up to 60, is that not enough for you, bro? You know, I mean, that's me. I'm just thinking, would you not want to pay yourself? Different story. But anyway, I hope I haven't angered anybody on my opinion on holding. If you don't want me to talk about holding anymore, type 1. Sniper 1, what's wrong with you, bro? I ain't rambling. I got 2 people in this stream. Traders and holders. I've got to accommodate. Now I'm rambling. I've got to accommodate for everyone, bro. So don't worry. You know? Two. Mad love to the pattern watchers, man. And to anybody new. Mad love to you. We're trying to do things out here, people. I'm trying to get you guys to understand. You guys, majority of you guys may not be familiar with trading, okay? You see Bitcoin drop from 59 all the way to 57 and people are calling it a crash. Please, bro. Please. That is not a crash. This is standard movements in the market. I'll say it again. When it takes 2 hours for price to wipe out 6 months of price rising to the upside, okay? That's a crash, my friend. Do not confuse chaos, okay? And people thinking that the word crash itself means it's actually crashing. Someone said to me, yo, there's a big red vector candle on the 1 minute time frame. Bitcoin's crashing. Bro, man, didn't even move $50. What's that? See, that's the thing. People aren't familiar with the ideas of the markets. You ain't seen volatility yet, okay? Bitcoin ain't even old enough for volatility, all right? Let's look at Bitcoin in the next 10 years. In terms of trading, you will see a crash. There will be a massive drop. And as long as it stays unregulated, they can move it whenever they want. And that's the thing about cryptocurrency. Trading is unregulated in cryptocurrency. That's why they're trying to pin it down. For the better, for the worse. They keep it tight in Forex. All right? If you go and take any currency pair in Forex, I guarantee to you, they will be staying within their average daily range. Because if they go beyond that, okay, they will be throwing off the market. More importantly, they will have to go back to it if they do exceed it by a certain amount. Dollar yen, it made a wild move to the downside, nearly over 100 pip move, when on average it moved 66 pips. Guess what? It pulled straight back up to bring things back into the fray. In cryptocurrency, there's no such thing as regulation in terms of trading. Yeah, Anti-Money Laundering Act of 74. Yeah, no worries. They need to know where you're depositing your monies and whatnot if you're using credit cards and what have you. But other than that, that's as far as it goes. Price can go absolutely anywhere it wants. You know? So, what can we expect Bitcoin to do? Bitcoin is in a continuation, ladies and gentlemen. It's rejected the 50 EMA and it's now working its way down. We've seen the criteria of what we understand to be a potential formation of a W. Why? Because the second level drop right now, you can see they've broken this previous level right here. So that implies we are in a level 3 drop to the downside. We are expecting them to stabilize and turn from this point. Okay? But how long is it going to take for them to turn? What if they do decide to come down all the way down to hit these pools of liquidity? What if in Asia tonight they get wind of this? What if US session has actually marked down price in preparation for Asia to bring it back up again? We have to consider the sessions. What's been going on in each session? Because you can see on MT4, the Asian sessions have been contained. Look at the journey that they've been taking with Bitcoin during the Asian sessions. They're getting smaller and smaller. They were preparing for this move. Okay? Check this. They marked price down lower. In the UK session, they hit the Brinks box, hit the stop hunt lows and brought price back up. New York followed through with a stop hunt rise, very small one, and then they dropped price down lower again and filled the previous wick. When Asia stepped in, they marked price up higher again, and then they pushed price down lower. The UK session did exactly the same as what it did in the last UK session, and they sparked price up higher. The US initially makes a stop hunt low, traps the retail traders to the downside, gets the longs filled at the lowest possible point, and then brings price back up, hits the rejection of the 50 EMA. Then in the Asian session last night, it gets even smaller. So they were just containing the zone, preparing for what we are seeing right here. Asia marks price up higher, get the shorts built at the highest possible point, and then they shift down lower. Then the UK session, followed by the US Brinks, does exactly and follows through with a move to the downside. 2 reversal points in the US session. Stop hunt rise, reversal point 1, reversal point 2, come back up. We've had a bit of a gap down in the Asian session. Now we're going to know what's going to happen in the later session tonight. It all plays out on what Asia does tonight. So what I say to you is this, ladies and gentlemen. Keep an eye out on what Asia does tonight, all right? Just pay attention to it. The reason being is because they're going to be setting up price to do something. Tomorrow is Friday, all right? Tomorrow is Friday. That only means that they can either make a run for profit or they're going to hold price in preparation for the weekend, all right? Yes, I know Bitcoin is in an uptrend on the higher time frame. You've got to understand, when I look at these time frames, when I'm talking about cycles on the 1 hour time frame, I'm making it in reference to my day traders, 50-minute time frame, day traders, 1 minute time frame, maniacs, okay? When I roll onto the daily time frame, this is in light for the position traders, the holders, the people that want to see what Bitcoin is doing at these bigger points in the chart. And this is saying to me that we are still in a cyclical move to the upside because we have just formed the retrace for level 2. Okay? The reason why this zone right here wasn't a valid rise level 3 is because it didn't take out much of the ground on the move to the level 2 rise. Okay? So it was a fake out. They dropped price down. Now we're waiting to see which point in the chart are they going to now formulate a pattern to bring price back up again. What if they decide to do this, guys? What if this happens? So what I'm saying is if Bitcoin decides to stabilize in and around the 50 EMA, because it's got a history now that when it last hit the 50 EMA, it stabilized around it, traded below it, threw price up and down, and then it made the move to the upside. What if we are actually formulating that pattern right now? What if the same thing's going to happen here? So a holder's going to look at this and think, okay, I got in at Bitcoin at 40K. I added to my position at 40. Now it's at 56. I'll see if I might add a bit more at this point. If it decides to turn back up, I'll start adding as it starts to slowly rise. Happy days. So there are cycles within cycles and patterns within patterns. They build cycles on the lower time frames to compensate for the higher time frames. All right? Look at the weekly time frame. Look at where we are. We ain't even broken the 13 EMA on the weekly time frame. Look at that. We're using the 13 EMA as support. All right? What if we are in a big pattern right here? And I've said it to you before. What if we're in the rise, the retrace, the continuation? This is just a standard movement. Look at the speed and size of this candle. Look at how quick they've dropped it. They've gone and recovered 1, 2, 3, 4, 5, nearly 5 weeks of price action to the upside, and they've wiped it out. Okay? Now, at this point in the chart, as you can see, is where the previous vector candle was, where the market maker started going long. Now, he's already been going long up here. Is he going to start turning price at this point? So yes, Bitcoin is in an uptrend. We understand that. But remember, we're all about cycles, okay? Cycles on the weekly, the daily, the 15-hour, the 6-hour, the 1 hour. It all depends on what preference you decide to trade from, okay? The higher time frame says that we are in a cyclical move to the upside. The lower time frame says that we have got one more cycle move to the downside, which will be formulating the peak formation pattern. Does it mean it's going to form at this point? Maybe, maybe not. But the only way we can improve the chances of a trade playing out in our favor is if we understand what price does in relation to the moving averages. What do we need to see when price is going to start making a move back up to the upside? Not just candlesticks, moving averages. We need to wait for the 5 and 13 EMA to start crossing over on the 1 hour time frame. Okay? The same principle behind the 15-minute time frame. We want to see that criteria, but on the 15-minute time frame, it's going to appear sooner than it would on the hourly. which is why I use the 1 hour to give me the general overview of what they're doing on a day-to-day basis, a day trading setup, all right? I'm not interested in the higher cycle on the daily. I will look at the higher cycle on the daily time frame at the end of the trading day to tell me where we are in the bigger cycle. Then I'll come down to the 1 hour time frame so I can exploit the weekly cycle, okay? What day, okay, was this? Okay, so the 10th of November, all right, where were we? 10th of November going into the 11th. What day was that? It was Thursday, midweek reversal, M formation, drop level 1, rise, drop level 2. We expect a cyclical weekly movement. This is the pattern that you're looking for, ladies and gentlemen. Rise up, drop, rise, M formation, drop level 1, drop level 2, drop level 3, peak formation to the upside. This is a Forex pattern because in Forex they trade 5 days a week, whereas crypto they trade 7 days a week. Okay? So, Sunday, Monday, yeah? Rise level 1. Monday, yeah? Tuesday. Wednesday, midweek reversal in Forex. Thursday, Friday. Going into Sunday, Monday. All right? That's a Forex pattern. In cryptocurrency, it's Saturday, Sunday, Monday, Tuesday, Wednesday, Thursday's the midweek. Friday, Saturday, Sunday, Monday. Okay? So there's always going to be God, man, stuttering games got it so bad. There's always going to be a variation on the theme. They will always switch it up. And our goal as traders, day traders, okay, is to try and understand where we are in the cycles. Right now, we have had a breakdown to the downside, okay? How long are they going to take before they decide to turn? Are we still expecting yet another move to the downside? One more hit to the downside before they actually form the pattern? Because the breakaway from this zone, considering that they've been accumulating in this area, look how long they spent in this area. Take the whole and the half numbers, ladies and gentlemen. What have we got here? The big 60k zone. Again, price phenomena. They build their shorts above key notable areas so they can get the best possible fill above that area so they can break price down through it. What were they doing more of? Drop down to the 15-minute time frame. What are you seeing? How many green vector candles are you seeing above the 60k? Look, breaking above it. Get the shorts filled at the highest possible point. Bang, pushing it down. Up again. Bang, pushing it down. One last attempt over here. Down, off they go. Make the run. Stop hunt, rise, collapse price. But look at the vector candles on the 15-minute time frame. What's going on there? Is volume actually starting to increase, or is it actually starting to slow down? That's the question. Second day of 8. What is it? Second day of 80 days bear market. Oh man, bear markets, bull markets. I really want to say what I really want to say about it, but I can't say it because YouTube's going to tell me off. I'll tell you why I'm not hitting that vape, bro. I'll tell you why. Because I'm spitting game right now because I'm trying to get the point across to people to help them understand. This game of trading is about your perspective of what you think it's doing right now. Okay? Quite frankly, ladies and gentlemen, we are in the game of guessing, whether you like to admit it or not. All right? But we use confluences to improve the probability. This is a game of probability, man. Okay? I'll tell you what happened to fundamentals, my friend. Fundamentals get confused with psychology. All right? That's my opinion. Because fundamentals is what they want it to do in the future. Okay? Price action right now is what it's doing. Okay? And the result of what they think of it. That's the thing. All right? I hate it, man. I hate it. I don't know. Am I getting a bit tense right now? Am I starting to get angry? I think we need to calm ourselves down with the inhaler, ladies and gentlemen. Craig David, you know. Oh my days. Look at lunar cycles and the last whole year every time. Full moon Bitcoin cycle. Do you know what? I don't disregard the astrological basis of trading. I'll tell you why. Because the Wyckoff theory, all right? William D. Garrett, okay? Guys like William D. Garrett, who wrote the book on torque analysis, he talks about the power behind a move, the pressure behind the moves. This guy's bringing in physics into understanding the way price develops in a certain zone. He's talking about velocity, bruv. Okay? And this is a 100-year-old book. You know? It's a 100-year-old book. Talking about cycles, the astrologies, you name it. They say it's all down to seasons, okay? Winter tends to be a season of, it's all dull, not so upliving, okay? And that's where you see pullbacks happening during winter time. Where are we at right now in the seasons? We're going autumn, winter, okay? Springtime comes along, okay? Things start to pick up. Then summer comes, we've had the biggest pumps. Where were we at with summer? We just finished summer and we're having these mad pumps to the upside. Happy days. Bitcoin making 2 all-time highs. Happy days. Live. Everything's all good. Okay? It's all seasonal. So I don't dismiss the astrology behind trading price action, because what are you dealing with? You're dealing with human behavior. And what's the thing about human behavior? It doesn't change. That's why this process happens over and over again. That's why Bitcoin, any asset, hits a 50 EMA and pulls back, because people respond to moving averages, because it's what indicators are out there. When you've got thousands and thousands of people coming to the charts and doing the same thing over and over again. Here you go. Let's draw a Fibonacci. Okay, let's draw. What else have we got? Let's actually start drawing out some Toblerone patterns and drawing these triangles and what have you, and make the self-fulfilling prophecy that price, if it breaks that point, you're going to go short, and if it goes above here, it goes long. So you're telling me that the market maker's business model simply can be broken by simply drawing a Toblerone pattern on your chart, a triangle, all right? See, the difference with a W formation is it's a psychological pattern itself. It's designed to trick traders. The principle behind a W formation, ladies and gentlemen, is to make you believe one thing is happening against the other. Okay? Let's look back at this W formation. Where was it? Let me drop onto the 1 hour time frame and pull it up for you. To anybody new to the channel, let's understand the following. Some of you guys may be familiar with this, but look at this. W formation had a nice little run to the upside. Okay? Market maker steps in and works in the number 3. Why? Because 3 is the magic number. 1, 2, and 3. Go and get any textbook of Amazon. They will tell you when a moving average gets hit 3 times, make your trade. Or if this area gets hit 3 times, make your trade. Why is 3 so important? Because the market maker knows that we get educated by these books. They get endorsed all the time. So they're using that against us. Call me cynical, call it a conspiracy. But ladies and gentlemen, the game is managed. It's not rigged, it's managed. And it's not managed for you to make a dime from it. That's why I say to yourselves, pay yourself at all costs. Because you're making money in a time and a place where you never expected to. So why would you challenge the idea of taking that money? Why would you say, yo, Tino, man, I'm in a profitable position and I don't know what to do? Bro, man, it's hard enough to get into a profitable position and you're still hesitant to close your trade? Why do you think they've got this chart right here on the glass node with different psychological states from the traders with unrealized profits? Okay? Why are people not paying themselves? Because people are greedy. They go through euphoric states. They are in denial. They are in belief. They have anxiety. They start getting optimistic. They have fear. They have hope. And then they have the one thing that happens in the chart, capitulation, is when they actually get rid of everything and sell. And then before you know it, that's the point in the chart when everything always ends up turning back. Look at this. Look at every capitulation point in the chart. Price always bounces away from it. Grab the traders when they're at their most fearful, and that's when you start moving price in the opposite direction. How many of you have entered and closed a trade at a point in the chart when you knew for a fact that the second you closed it, it was going to go in the direction that you initially had set in the first place? Welcome to the game of psychology, ladies and gentlemen. That's what this game is about. The W formation. Why is it a psychological pattern? Here it is. 3 hits to the low. Market maker sets up the retail trader to the belief that price is going to go down lower. Okay? Moonboy is starting to get scared. He then sends price down. Okay? He starts going short. All the while in this range, liquidation points are being set. Liquidation points are still orders in the chart. Remember, when you go long, the market maker's going short. Okay, when you go short, the market maker's going long. So the market maker is building his longs at the lowest point because the moon boy and the retail trader, he buys when price is rising because that's what the retail trader books tell him. Okay, you buy as it's rising because it's on the premise that it's going to continue to rise. That's not the case. Why is it at all-time highs? People are buying at this point. Why is it at all-time highs? They are the biggest turning points in the chart because that's where everyone is at their most excited and they are blind by greed. Guess what? Their liquidity is stuck in the chart. It's committed because we are so excited. And that's where the market maker initially drops price, okay, attacks those liquidation points, throws all those retail traders off. Then he tricks them one more time and makes them believe to buy the dip. He hits the high one more time, M formation, drop. Now, I'm speaking in hindsight. Go back in the previous streams and have a look at this happening in real time. I'm trying to get you to understand that the patterns that you see on this chart right here are psychological. They are designed to make people do the wrong thing. So if the market maker is trapping traders to send price to the downside, okay, he stabilizes price and brings it back in towards the 50 EMA in this zone right here. So the same guys that actually got stopped out on this move to the downside when they hit price higher, they've now got another opportunity to step back in because the 50 EMAs acted as resistance. So then the market maker then sends price down lower. Look at the vector candle. He steps in and commits the retail trader to make him believe that this zone is going to get taken out because the retail trader's thinking, oh, what point do I go short? What point do I go short? What if it decides to do this again at this point? You know what? I'm going to go short. Market maker steps in, stopping volume candle 1, stopping volume candle 2, contains the zone, spikes the low and shifts all the way back up and recovers the previous vector pools in the chart. Why? Because he's got all the liquidity trapped in this zone and committed. Now, all the liquidity here is short. That means liquidation points are forever to the upside. So what does he do? He taps those liquidation points so that he can release his longs on the way back up from the previous move down and then build more shorts on the way back up and repeat the same process over and over again. Another W formation. Do you need me to explain it to you? No, you don't. That's the basis of how price action operates in this game. This is the hardest, easiest way to make money, ladies and gentlemen. The sooner you become familiar with that, the more serious you're going to take your trading. And the sooner you're going to progress in understanding how to exploit the behavior of the market maker in the charts. And Bitcoin's going down lower. There you go. Next pool of liquidity getting ready to be taken. Well, just look at it. Let me explain to you the idea of someone, the fear of missing out, okay? This is what I don't get about FOMO. The fear of missing out what? Fear of missing out at the guarantee that you're going to make money in this move? Nah, bro, it doesn't make sense. How can you be fearful of something that you don't know is true? Your FOMO is saying to me that you know that price is going to continue lower and you're upset because you know that you'd be able to make a profit in that position. You don't know jack. None of us do. Because at any moment they can switch the direction. So why are you putting yourself in a position of FOMO in something where the game itself is based on uncertainty? You're trying to make a guarantee of something that has not got any guarantees. So by that principle, you shouldn't be feeling that emotion of fear because you've got nothing to miss out on because you don't know if it's going to happen or not. Welcome to the game of probabilities. You know? If you've missed out on the move to the downside, guess what, ladies and gentlemen? You know exactly what I'm going to say. Yo, Jago Moretti, thank you very much, man. You're shouting out people. Thank you very much, bro. If you are new to the channel, ladies and gentlemen, please forgive my rant. But sometimes I feel like I need to engage in this sort of tone just to get my point across. Sometimes I do come onto the stream. We talk about some happy price action. When Bitcoin's doing nothing, it's a little bit more of a relaxed thing. But I feel as though I need to raise up the bar a little bit just to get the point across from my opinion in this game and how I understand how the market works. You know? Mad love to anyone that's liked the stream, anyone that has subscribed. Thank you very much. But we're just going to focus right now on whether Bitcoin is actually going to make this move to the downside. Let's have a look at our dearly beloved book map. Now, this thing that I'm going to show you right now, I'm getting lots of people hitting me up about this is right, this is wrong, this is right, this is wrong. Tomorrow I'm speaking to the vice president of the company itself, who's involved in the development of this. So I'm going to ask him questions about the book map. So far, it seems that I'm understanding it because he would have called me out and said, you're saying it wrong. Okay. This is the book map of Bitcoin across 5 exchanges. So all the volume, and wait for it to load up. I'm going to get rid of these because they take up a little bit more of the computer usage. But I'm going to give you guys the live feed of the order book of Bitcoin on Bitstamp, Binance, FTX, GDAX, and Kraken. Okay, when it decides to load it up. All right. Now, this platform itself is useful at helping you understand, okay, the way and the direction, or should I say, the development of price. Okay? This isn't a dip. This is a crash. Since when do crashes happen slow? They don't. A crash is instantaneous. It's out of the blue. Why do they call it Black Monday? Yeah, because it's out of the blue. It's completely wiped all of the price action. Stop saying it's a crash. It's not a crash. All right? If it was a crash, do you think they're going to spend time retracing and doing all this madness? They're going to shift out of the zone, bruv. Anyways, stop saying it's a crash. It's not a crash. Hashtag, it's not a crash. Come on. Spam up the chat and say it. Hashtag, it's not a crash. Jokes aside, everyone's entitled to what they think price is going to do. I ain't going to challenge it. I just get a little bit frustrated when someone says it's a crash. I mean, come on. What is a crash? You know? It's a tickle. It's a scratch of the left testicle. That's what it is. Skyland, mad love, bro. No worries, Axel, man. Mad love and respect to all of you. Thank you very much. God bless you all. All right, then. So, in front of you, ladies and gentlemen. All right? A pre-recorded crash, you know. This is Bitcoin right now in the order book. Okay? The darker the lines right here, the more liquidity. Okay? Hold on, what's this? Jack G, what have you just said? Hey, man, what about MT Gox releasing 114,000 Bitcoin in 2 days? Some say hedge funds are shorting in preparation for this. The coin itself and when you're trading it is two different things. Okay? Now, the impact of people trading against Bitcoin may have some effect on the actual value of it as a coin itself. Okay? Crypto Juice, you didn't have to do that, bro. Listen, Bookmap is something that you need to spend time on. Okay? You need to spend time on it and understand it. I watched it for 48 hours. Okay? And I managed to understand some aspects of it. This is what we understand. Okay? In today's masterclass session with the patrons, we were talking about Bitcoin hitting certain zones. Okay? So this was taken in the masterclass session today. Okay? Now this was price. And this was the 58 zone down here. And we were projecting that they were going to come back down towards this previous zone of liquidity right here, which was the wick in the chart, as you can see right there. So the book map was showing us right here that there were a ton of orders at 58,600 that were yet to be filled in the chart. They were coming in. Okay, this was the order book populating with orders of limit buys at the lows in the chart right here. Okay, but price was all the way up at 59,240. What was the conviction? Well, look, the book map is one confluence. Price action is another confluence. Okay, so what we were trying to gauge is understanding what reason did we have to believe that it was going to come down to this point. We had one confluence, a ton of orders being stacked at 58,600. Nothing was coming up here as well. So there was no interest to see price to go higher. Okay. On top of that, we had the MT4 zone, which was showing the range daily low and yesterday's low in sight. So usually they do make moves to those zones if they are presented. Now, taking the daily open of Bitcoin from yesterday, okay, and sorry, today's daily open, and dropping it all the way down to price, you can see that Bitcoin actually exceeded its average daily range. It went beyond 34,700 pips. Okay, yesterday, today's Bitcoin's range, okay, I believe was 24,000 pips. So it exceeded it by nearly 10,000 pips. Look at how fast they brought it back into the fray. So look at the difference now. That there is 15,000 pips. Okay, so they brought it straight back into the fray because they needed to regulate the market. They needed to bring things back to keep traders committed to the charts. Okay, so this book map was understanding and taking confluences. Now, if you look at what price has done, okay, it's gone and attacked all that zone. So the book map came into fruition because at that time, the book map was showing an imbalance favoring limit buys. In other words, they were favoring lower prices. Because remember, when the market maker buys, he buys at the lowest point and sells at the highest point. Okay, in order to buy, someone has to sell. So what was going on? Okay. So what we're looking at right now in the book map itself, we can see there is a concentration of orders at 56,500. Okay. But what you need to be mindful of with this is this. If this stays static and it stays red in the chart continuously, we know at some point they're probably going to try and take it. However, if you pay attention to it, sometimes you'll see the color is changing and it's starting to get brighter, which means that the thickness of the liquidity in this area is starting to close. They're getting rid of it there because they want to start marking it up higher so they can get their orders filled sooner. Coupled with the imbalance of the book, when it's turning green and moving to the right, it means that the book map has got an imbalance of limit buys, so they favor lower prices. When it's going to the left and it's minus, the percentage is a minus figure, it implies that volume is favoring to the upside for the limit sells. But the volume itself is showing now it's up 20-30%. So there's a lot of liquidity coming into the chart right now. So these orders are looking to getting filled. So look, pay attention to this zone right here. If it stays the static red and dark orange, it means that that liquidity wants to get taken and it's probably most likely going to get filled, okay? But just because we think that it's going to get filled and we would like it to get filled because of how close it is, they can bring it ever so closely. Do you see that there? You see how that line came in there? So they just took off some orders but added some more closer up. So it's now got darker. So liquidity is coming in. If I'm correct, it's 176.77 million at that point in the chart. So we're just going to wait and see if they actually do decide to bring it down there. You know? We need to have fear in the market, otherwise whales won't go long. Come on, man. You know, I'll be straight with you. We need to have fear in the market. I agree with you. Because those are the two indicators that the market maker uses. He uses fear and he uses greed. Those are the two things that make people buy and make people sell. Those are the indicators you should be studying, ladies and gentlemen. Understanding people's behavior at the lowest point in the chart and at the highest point in the chart. That's all you need to be mindful of. Look at that. They cancelled the order. They've reduced it. Does that mean it's going to come down to that point? Or are they just moving it higher? Have you noticed that? They cancelled that order there. So let's see if they actually do bring it down. Because now the 57,200 has got an order taken up here. So they're waiting for this area here. So there's interest at 57.2. Could that mean that price is going to go back up to that point? Are they going to tap this zone down here and then move back up to that zone? Taking the confluences of what price is doing right now. They've made a nice spike to the downside. Let's look at the candlestick itself and see what's actually happening in that zone. Huh. Purple vector candle. Are we going to see 3 hits to the low, ladies and gentlemen? Are we going to see the first one here? We're going to see another hit here. Is price going to bounce away from this zone? Come back up towards the 50 EMA, which will be married at this point right here. And then they should form another bottom right here. And then we're going into Friday price action, where price will just end up doing this. Or it can either do this and then spike down lower, or it can do that. Different scenarios. But we are in the same story as we were only a couple of weeks ago. Okay? So now look. 56. Those orders have disappeared. Look at that. They spiked those orders, okay, and come back up. Now they've moved them down to 56. Yeah? When in doubt, zoom out. That's the truth. That is the truth. Here we go. Here we go. Keep an eye out on this. Volume starting to come in there. Bookmap is showing an imbalance. 32% sell. So there's a lot of pressure to move price down lower because they favor the limit buys. These orders here should get filled. Look at them bringing in orders here. Look, these are little orders. The blue, the darker it is, okay? So if it's light blue, it means it's a light liquidity, so not that much money, okay? If it's orange or red, it means high liquidity. If it's yellow, it's somewhere in between, all right? So you can see they're trying to stack orders in this zone right here. So if they do break below the 56,600, all right, which is around the whole and the half numbers. What did we say about the whole numbers and the half numbers? Market makers build their shorts above key notable areas so they can get the best possible fill above that zone so they can break down with the best amount of liquidity. Price should now start to pull down, okay, based on them building their positions in this zone. Look, volume's coming in, 28%, bang. See those orders disappearing? Spoofs. Now they're stepping back in, putting them in, taking them out. Trying to guide price in that way. This is how I understand the book map. Look, cancelled all those orders there. Now they're disappeared. Now these orders are starting to come in. Notice, cancelled those orders, disappeared at the 57.2. Okay, they've moved it down now. Book map imbalance to the buyers. Okay, they want to push it down. Look at all these orders coming in. These are orders that are sitting in the order book. They're coming into the order book, okay? They're not been filled just yet. They call it resting orders. Now we've got a blue vector candle at the lows right here, ladies and gentlemen. This is a turning point right now. Make or break with this candle. What we got? 2 more minutes until a new 15-minute candle. So we'll see what they decide to do at this point. If they don't do it, we'll end the stream and I'll go and make myself another cup of tea. How about that? 2,025 of you in the room. God bless you all and thank you very much. Be sure to get those likes up, ladies and gentlemen. It's so hard to ask for them, you know. I like you. I hope you like me. Sounds so cliche, doesn't it? Cheesy, if anything. But hey, we're here just watching charts, ladies and gentlemen. That's what I like doing. Look at that. Look at that little crafty move right there by the market maker. Nice big bulk order just been sat there. Now orders are starting to get placed. Because they think it's now going to come lower. Earlier, this was not here, okay? This was not here earlier on, but the 56 seems to be the point where they just want to keep those orders there, okay? So just keep an eye on the chart on what it's doing. This is what I was doing earlier on today with the Patreons, just helping them understand the basis of price and how to read a candlestick, okay? Here we go, purple-violet candle, right there. This is turning point. Here we go. New 15-minute candle. In 5 seconds' time, this is make or break. Are they going to turn from this point? Here we go. New 15-minute candle. Follow through or continuation to the downside. Here we go. There it is. Come on. Push it down. I want you guys to just see this. See this push down to the downside. So they can fill these orders so we can understand. If they do fill these orders, this breaking price is going to drop. If they don't, they will be holding the zone. Remember, day trader, I'm looking for certain pushes and pulls away from certain zones, okay? They're probing. See how the order's disappearing now? Big sell there. Volume rising. I need to pull up the volume indicator in the chart. If you are new to the channel, guys, get over to the Discord because everything that you need in terms of volumes and what have you and indicators are available for you. Okay, here we go. The volume. Volume, pressure, stopping volume, more volume than the previous candle. Remember, this is not volume on the amount of times that contracts are brought. Okay, this is how many times price changes. Okay. So as it's changing, it's moving down lower. So there's more aggression to move price down lower. That's how we understand the volumes on this tick chart right here. Okay. Okay, then. Seems like they're not going to do it just yet. But ladies and gentlemen, I am going to end the stream. It has been a pleasure to actually sit here with you guys and talk about this. Make sure that you subscribe so you can catch up with us every other day. We're actually streaming Tuesday, Wednesday, and Thursday, 2 streams a day where we do this sort of thing to break down price action with Bitcoin. Okay. For anybody that may want to take a screenshot of this right here, which was the setup before the move actually happened, to understand how they developed this move to the downside. Why was this point interesting? Why did we expect it to come to this point and this point in the chart based on what they were doing here? Okay. So, ladies and gentlemen, mad love and respect to all of you. I hope you have yourselves a wonderful weekend. But going forward, just be mindful. Hold on a second. Before we actually go, hold on a sec. Are they going to do it? I think they're going to do it. There it is. There's that push. Now watch this. With that big push right there, this is something that I've noticed quite a bit. Every time there is a big push to one zone, there's always a pullback from it and then a continuation to it. So it's like a little mini pattern in the actual price itself, or should I say the development of the orders coming in and out of the chart. Okay. Looking at the book map itself, you see a minute ago, those orders were red. They've cancelled them, reduced them, and moved them higher by principle. That's what we make the assumption on. I think price is going to release into this zone. They may even attack the lows because 56 ain't going nowhere. They've got orders stacked in that zone. Nothing's happening up here. It's all 56. Okay? So just be mindful of that, ladies and gentlemen. Okay? Just be aware. They can turn at any point because volume is starting to slow down as they bring price down lower. So this could be the final attempt by the market makers to trap the retail traders so they can initiate a stop hunt rise. We're going into 11 o'clock. So we've got Tokyo tonight and Hong Kong. So just be mindful of that as well, ladies and gentlemen. Okay? Go have yourselves a wonderful evening, guys. Mad love and respect. And I will catch up with you all over the weekend. Take care of yourselves. Thank you very much, guys. Peace.